Good morning, traders. It's 8 a.m. Chicago time on Tuesday, the 19th of September, 2023. Thanks for being here this morning. This is episode number 2539. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I think Vernon Hodge has been listening to the Trader Bite for so long that he can tell that the audio is good enough before the show even starts. He's hearing echoes of my voice from the past and thinking it's today. Thanks for the mic check. Appreciated. Let's dive in here right into the convergent trading pre-market summary sheet this morning. Just looking at the overall picture, really a mixed to a slight slant to the risk off side this morning. We got some numbers at 7:30. Those include the Canadian CPI, which came in pretty hot. U.S. building permits came in. Housing starts came in at 1.283, which was softer than 1.44 million expected. Canadian CPI came in at 4% year on year versus 3.8%. Core CPI came in at 0.1 and 0.3, and then we had building permits came in pretty hot, 1.543 versus 1.443. So that's the overall picture. Again, Canadian CPI, core CPI pushing higher, 4.27 versus the 4.1 expected. And that's where that stands. Eurozone inflation this morning as well came in a little bit higher than expected. Not expected to be a big mover there, but the inflation year-on-year final came in at 5.2%, or lower than expected, 5.2% versus 5.3%. The FOMC decision tomorrow, that's the big stuff that we're all waiting for. But there's a mess of stuff. There's the UAW strike that's going to hit the auto manufacturers. So they're looking okay for now, but that's likely to go south. The Canadian Auto Workers Union extends Ford's negotiation by 24 hours after receiving a substantive offer. And then for today, there's really not much left in terms of big numbers. So let's turn our attention to the S&P. The S&P again in an active overnight session, multi-distribution profile, 134,000 contracts traded, which is a little bit low. 28% of the inventory is long, so not much there, and the range is 17 points with a point of control overnight at 45.0475. Okay, so that's the overall picture. Here it is. You can see the selling off. This thing's been selling off since the CPI number out of Canada. We also have yelling out some comments, pun intended. She's making several comments about oil, about soft landing, so on and so forth. Of course, if you're a Convergent member, please make sure you have your CT news running so you can hear what's going on as it comes out. And then, so we sold off just a half hour ago here, and we continue to sell off. Again, market's pretty active price discovery. Here's what was expected yesterday real quick. Yesterday we talked about a couple of areas that are of significant importance. One is the overnight high, which is in line with the single prints from Friday. Secondary single prints in the 45.20 area with the point of control right in that 45.14 to 16 area. The MC volume point of control at 45.15 key area. This has been a key area all along. Um, and so if I forward on this video based on the analysis here, you'll see that I talked quite a bit about the market very, very likely just pushing down, failing to continue down, and then very likely taking out the overnight high with the target circled here of 45.15. I was looking for 45.15 and 45.20. Oops. 20. So this is from yesterday, responsive buying, and I explained why, even though we opened at the top end of the range on Friday and we ended up with a multi-distribution trend down day closing at the low with the point of control at the low, this would normally tell us that the auction is incomplete and therefore we would expect it to continue lower. But I said yesterday that this is likely to show a low and then respond up to the overnight high, 15 being the point of control and then 20 being the ceiling, the expected ceiling for the S&P. So that's what we expected. For those of you who are here, you might recall that we talked about this. Here's what actually happened. This is what actually happened here. Loading the data so you could see the overnight session and pulse down and so on and so forth. And then Friday was a trend day down, closing near lows. But you could see that, Friday left us with three distinct distributions. 1, 2, 3. And the expectation is that we are likely to revert back. And the action yesterday was just that. We ended up taking out the prior low, which we expect, took out the overnight, the prior session low in here very early on. And then we pushed to the IB. We had a small 2-tick break of the IB with a very clear failed auction. This was, to me, this looked like it was likely to go sideways for the rest of the session. But what it did is it bounced back up, took out the high, the IB high again, and it pushed to where? It pushed to 45.15. So it took out the 07.50 as expected, and it went to the 15. So this is scenario 1 yesterday, responsive buying playing out as expected today. The overnight session in the S&P is inside of yesterday's day session. We are stuck at the low end of the range. So when we step back out and look at the bigger picture, look at where we are. We have this, double distribution kind of multi-distribution profile. We built a double distribution profile today and we are below it. This is quite bearish for this morning. So this looks to me like it made a valiant attempt at coming back, and it did come back to the middle of the range, to the 15s here, and it rejected it overnight. This is very likely to take out the 44.83. So today, 44.83 is on deck. Ugh, that's ugly. Man, hard to write with a mouse. 83 is on deck for today. So if we don't get responsive buying again right off the open, the bears are likely to take over because there was a pretty good effort by buyers yesterday. We held a positive delta into the close. We had a maximum positive delta of about 16,000 and we closed a positive 18,000 delta, cumulative delta yesterday, yet price did not play along. And so after such a big effort to the upside, this opens up the door for sellers to more safely take it down. And the area to take it down to will be 44.83. And if you recall, the extended target is 44.50 below. And then below that, if you recall from when we were there, 44.19. Do you remember that price? Well, that price is now 44.80-ish. Well, 70-ish. Should be 44.69 with the adjustment, with the roll adjustment. So 83 Okay, all the way down we have a low volume node here at 80, so 83, but look for 69, and then from there we're looking for 44.50 as key targets. But I'm looking bearish today. The idea of bearishness, I'm looking for which way is the impulse going to be. If it's to the downside, then I'm trading pullbacks. I'm trading against predefined levels. On the short side, looking for continuation. If we open, let me change the color so as not to confuse you all. If we open and I think this is the color I've always used. If we open and we push down, it looks like it's making a really concerted effort to the downside and then turns, goes through the open, consolidates, holds, and then takes out that swing high. Then you're looking for a gap to settle, and then the same thing that happened over the last 2 days, which is to just basically hang out at the 4,500. Okay, and so we're looking for an impulse up and a squeeze to the 4,500 yesterday. It definitely sat there at the 4,500 and traded quite a bit of volume, and it did so on Friday as well. Markets finding balance there. This region here is starting to build multiple distributions in this area. And we're kind of standing by. This has been a chop fest basically since the beginning of the month. It hasn't done anything, right? So we've dropped, we've gapped down, we dropped, we went back up, higher low, fill the gap in, drop to the lower end of the range, hold balance near lows yesterday, and now we're likely to extend the low down. Is what it looks like. So scenario 2 is responsive, which is not really expected, but the market can do what it wants. The thing is, we're at the edge of balance. Is there anything that's going to tilt us out of balance here? I don't see anything that's likely to do that today. I see that for tomorrow for the FOMC, although the market's not expecting any surprises out of the committee tomorrow. So to me, it just seems like we have reached this equilibrium, and there's not much of a commitment in either case. Big buying day Thursday, big selling day Friday, sideways day yesterday. But the most significant thing about yesterday is that we did open and we did push higher, and then we failed to hold. I mean, if you look at the action yesterday, this is very, very clear. It's very, very clear that it's not able to hold on. Let's see, FF for white. You could see that nice effort, range extension up, beautiful follow through. So you expect the 15, we expect the 20. And then what it did is it rolled right back into the initial bounce, and it settled right on the edge of the initial bounce, right inside the initial bounce. We didn't have a neutral day or anything. To me, this action here, for some short-term traders, they read this as a head and shoulders with a pivot right there at the overnight high and a breakdown. But the overall price action here from a price action perspective plus an auction perspective, this is pretty poor. These are pretty poor results for the buyers, and I expect the sellers will step in today and carry it forward. So this is expected to continue to drop to at least 83, if not beyond today. That's the key thing to keep in mind. So back to the TPO chart for the NQ. The NQ, same thing, followed basic auction principles, test up, push down, multi-distribution, volume point of control at the low end of the range, close at the low end of the range. We expect this low to be tested in the very next session. We did test it in the very next session. We were responsive buyers in the NQ. Double distribution profile, we're at the low end of the range. Same thing. If the Nasdaq pushes up today, this morning, I'm looking for it to struggle at 15,380. So the 380 over here. 15,380, and then I'm expecting it to release to the downside. And if it does, it's already taken out its equivalent to 44.83 here, and it's likely to now push right through back into the next distribution down, which is 15,250 and lower. So a naked point of control here, and then potentially lower. So the Nasdaq looks weak to me as well. However, I don't know what's going to happen. Nobody does, and so I have to read the action as it comes. So if we open, test down sluggishly, and then we end up with an impulse to the upside. Impulse meaning a strong rotation on good volume back into settlement. It may just rest here, and the buyers are kind of pushing back, and we have this kind of equilibrium down at the low end of the range. Not expecting it to run to the upside. Crude, on the other hand, crude, man, this thing is just, oof. It's, yesterday we opened in a gap. Talked about this a little bit, and I said yesterday, if you play back yesterday's video, I said the attraction is still going to be 90 right here, this high volume node, and it went right down to 89.91 on the low to finish right at the IB low in the mid of the range. And then this morning, further input to push us higher. And so, and there have been moves, as someone just mentioned in chat here, there have been moves in the treasuries. You look at these treasuries, and they are really separating from their monthly VWAP, moving lower as the futures go lower. What happens to yields? Can anybody tell me? So this is the 10-year ZN. This is the bond, the 30-year bond ZB. And these things are squishing down, which is relatively bearish right now in this environment for equities, because as the Treasury futures drop, yields go up, interest rates go up for those durations. So this is how this is kind of shaping up. So the treasuries are kind of driving things a little bit, and of course, the FOMC tomorrow doesn't really surprise us. So that's where we stand today. Again, crude is a runner. Crude, you just have to be careful on the short side. Again, today, crude opened at the low end of the range and is pushing higher unless it crosses the open in crude at 91.91. I think it opened at 91.91 in crude. Unless it crosses the open, I would not be a seller in crude. It needs to cross the open and start moving into the gap for me to even consider being a seller. This is a very bullish behavior in crude, and crude kind of putting a damper on things as it will eventually permeate into consumer prices. Okay, so that's where we stand. Again, please hit the like button, and of course, if you're not subscribed to the channel, please subscribe. It helps promote the channel. Watch your risk. Let the trade come to you. If you don't know what that means, it probably means you don't have a plan that you believe in, because if you do, then you would let the trade come to you. Try not to chase the market around. This isn't a good environment for that. Good luck.